Today we're looking at actually one of the smallest of the cannabis operators in the public markets, C21 Industries. And actually they produce the largest free cash flow out of all of the MSOs, even though they're the smallest, just with 2 retail locations, and their cultivation capacity is only quite modest as well. So this is not your typical cannabis MSO. They've got 2 retail locations in Nevada. That's it. So the reason I want to cover this company today is just because of some of the financial highlights. So we've got 46% gross margins, which is only comparable with the rest of the industry, but they have 22% operating margins, which is the highest, and that is turning into free cash flow. Their market cap is about 35 mil, so it's small. Price to sales is 1.2x, which is high compared to some of the others that are under 1, but their EV to EBIT is at 8x, their EV to EBITDA is at 6x. What makes them unique? Well, I'll explain in the rest of this video, but they've practically got no debt, and their debt to equity is at a tiny little amount, a little bit of debt to EBITDA, but they've got practically no debt here. They've got practically no stock-based compensation. I couldn't find where the salary of the C-suite was in their annual reports. They've got high insider ownership, which I really like to see. They also have this revenue per dispensary. The amount of money that they're making for just their 2 locations is very high. And one of the only red flags that I have found so far is that they have 60% intangibles to asset ratio. So things like goodwill and their licenses and things that are not their intangibles. I think licenses are not worth anywhere near what people think they are. So I think that intangible number to assets is too high. But look, having high insider ownership, low stock-based compensation, and practically no debt makes me interested. Now, they are a really small company, and they've only just moved to GAAP accounting, and they were actually suspended back in June from trading until they got their financial statements organized. This is a bit ugly. That's not a good look, but results have been out now for quite some time, and they are at GAAP accounting. The GAAP accounting rules are in place, which is good. It just took them a little longer to get organized. Being a small company, I guess that's part of the deal. Now, the good thing is that they were quite transparent about it all. And the thing was that they found an error in their paperwork just as they were about to release it. And then they had to go back and fix it. Therefore, there was a delay, and therefore there was a halt of their trading. I actually wasn't too worried about it, but it doesn't paint a great picture that they have their house in order. That's just my gut feel. Now, turning back to the operations of the business, they were actually in Oregon, but they've been selling that off to focus solely on Nevada. Now, they do seem to be financially disciplined and operating with this positive free cash flow, which is awesome to see. I think they're actually pretty cheap as well, but almost rightly so. Let me kind of explain. See, growth is going to come from expanding in Nevada, which is already in motion and expanded growing capacity, and they've got plans to expand their retail footprint as well. So that's good to see. This isn't like Planet 13 that are targeting the tourist strip in Las Vegas. C21 are based in Reno and focus on serving more of the long-term community. I'm going through some positives at the moment, but we'll get to those negatives. They're running this show at the moment without any debt, which is really good to see. So that limits the risk. It's the tiniest amount of debt. They've got free cash flow stability at around $5.5 million at the moment. And at a $35 million market cap, well, it depends when you're watching this, but that's about 6-7 times free cash flow. Considering all the catalysts that could come in the industry, that seems kind of on the cheaper side. I think it is probably about fair value considering the lack of real competitive advantage, but with some growth plans in place and a reasonable track record. So it's probably easy to assume that some of the catalysts, a good operator like C21 could see a multiple of around 10x, maybe 12x on far higher free cash flow number in the future as well. So things like safe banking, changes in tax regulations, federal legalization, things like that will boost cannabis stocks overall. That'll be the catalyst of the industry that I'm talking about. And I think multiple re-rating is probably fair, but I don't think it should go any more than 10 times. 6 or 7x at the moment for their free cash flow is similar to what a private business would probably be valued at. So being able to access private prices on the stock market is interesting. Okay, now let me cover some of the issues. Now, like I've already said, I don't think they have a really significant competitive advantage. I think they're just too small. They don't have enough diversification in operations and in revenue. What if some more stores were to come to Reno from competitors? That will take share away from C21, and that could be quite a hit to them being only in a couple of locations. So essentially, these guys are just a retailer. I don't see any reason they will be able to fend off the competition. I don't see any big reason that they can grow. The management discussion and analysis doesn't show me any reason to invest either, besides possibly they're going to make an acquisition in the future. I don't know where this sits, and I just don't see an easy path to growth. Okay, C21, being one of the smallest operators, free cash flow positive, I'm actually just going to put them in the C tier here today. They're too small. Because of all those issues, I think they're an interesting investment opportunity, but I don't think it's much more than that at the moment. I'm not that excited about anything in particular. Yeah, I do like that they're a good operator though. This is a bit of a wild investment, I think. If you're really interested in this, I think you'd have to really get to know people running it and things like that. Yeah, so this one's not for me. I'm going to put it in the C tier for now, but maybe I should put it in the B tier, in the low part of the B tier, because they do have their free cash flow positive. No, I can't. I just don't see enough of a competitive advantage. Okay, C tier it is. I'm happy there. Maybe they'd be the top of the C tier. I'm not sure. I might rearrange this. I'll think about it a little bit more. C tier for now. I'm happy with that. I hope you're enjoying my little tier list here of the MSOs. I've got a couple to go, and I will see you in the next video when we'll do goodness growth next time.